What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down why tomorrow is going to be a very important day for Tesla, for the overall stock market, and what's going on with the economy because of the fact that we have the FOMC minutes coming out. So I'm going to break down when the FOMC minutes are coming, how this will affect the whole markets in Tesla, what's going on with the news affecting Tesla and the data, and what you should be watching for tomorrow. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is any could be a free Tesla share. It's a limited time offer. The offer ends in just 7 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So Tesla was actually down 5% for the day, and this was very interesting because the whole market ended up taking a hit. Now, this was also a little bit capricious because of the fact that last week the market kept on getting bought up over and over and over again. Retail was so bullish, and now sentiment is beginning to shift quite quickly. Now, what's interesting is if you look at the algos in the market, there was so much buying last week. The algos were programmed to start buying the dips. And then starting today, the algos did the opposite. They actually started selling quite a bit more, and they were not buying like before. This means that the market is not being artificially propped up like it was last week. And a lot of that is because of the options chain in the markets. SPY had a crazy amount of puts that were bought expiring last Friday. And because of the fact that so many were expiring, the market makers started pumping the market super hard. They wanted to get some nice closes. The same thing happened to Tesla after the quote unquote recall news came out. That's why Tesla started pumping. And then what happened was this week we don't have the same options chain. It's nowhere near as crazy. So the market makers are not buying up the markets like they were from before. Now, this is telling me that yes, the market is now showing some signs of weakness, but now everything will depend on tomorrow. But before I talk about that, let's talk about some news affecting Tesla. There was not really any major piece of news that came out that would really explain why Tesla should be down 5%. However, the whole rally that Tesla had, you could also argue that it was kind of like overbought and we are set for some downside, completely understandable. But I just want to make it clear that as of right now, we don't have a confirmed location for the next Tesla investment in Mexico, according to the president. This article just came out this morning. We still don't know the location, but many people have some ideas of where it may end up being. We still have to wait for that. We could get more confirmation during Investor Day. Going into Investor Day, a lot of people were very, very excited about this. People still are, and I'm actually very optimistic about this event. I do think we could get some good announcements, but you always have to remember the saying, buy the rumors, sell the news, meaning that just because there's a big event and there's so much hype behind that, the amount of hype could cause a share price to just explode right before the event. And what could happen is expectations may not actually be met, and we could still see stocks end up slowing down afterwards. So please be very careful, especially as the tech segment of the entire market is slowing down. It's very important to be cautious. As for Tesla, the Model Y inventory levels are actually, they increased a little bit, but they're still on a bit of a downtrend. They're currently at about 149. What this means is right now, most of the Teslas are being bought up in the USA, showing signs that demand is still relatively high. We also saw some price increases or potential price increases both in the US and maybe parts of China. And that's showing some signs that demand is actually still increasing. And that really shows that the overall price cuts, the bigger price cuts by over $10,000, depending on the model, that did help Tesla big time. It still is helping it to this day. Now, finally, the volume did end up slowing down. We only saw 177 million in volume. The average volume for the past week was over 208 million. So Tesla's not getting the same buying pressure as before. And I also want to note that we did see the short volume percentage increased just a tiny bit. It's currently at about like 63%, which means that the majority of the volume was algos selling, people selling the Tesla shares, people actually buying puts, and etc. When too many people start buying puts, for example, or they start trading puts during a time like this, what else could happen is market makers may start hedging by selling the shares. That way, they're not a big player in the game. Now, that in turn is actually causing Tesla to slow down a bit. That's not the biggest factor, though. I'm going to break down something for tomorrow, too. Now, given the data, Tesla was showing some very nice relative strength. It might actually see a slight decrease in the price pairs ratio, telling us that the strength may start to decrease a bit because tech overall is starting to slow down and slump a lot more than many other segments. Energy is holding up, it's doing a little bit better, but now tech is slowing down, and this in turn is actually dragging Tesla down with it. Now, despite that, many analysts are still very bullish on Tesla. I still am very bullish long term, but I do believe we have to be very cautious over the next couple of weeks because big things could shift in the market. On top of that, Tesla, as long as it has these strong earnings, we've been beating estimates over and over again. As long as it maintains that, Tesla will be completely fine for the long term. I'm still very, very bullish. And seeing them coming up with these new game plans for the longer term, new ideas, new investor days, I still think they're keeping investors engaged, and I still think Musk is doing a great job, even if he isn't as active on Twitter or like talking as much about Tesla on Twitter in that sense. But I still think he's doing wonderful. Now, Tesla's green about 49% of the time on Wednesdays. We historically are not always that green, but seeing how oversold the market is, we are kind of due for a bounce, and that's what I believe could happen very soon, at least a small bounce. I didn't see too much going on with the short interest. It still is pretty flat. This could change over the next few days, though. And finally, I didn't really see any massive things going on right now in terms of like the news. So the news doesn't really explain why Tesla dropped like this. This has more to do with technicals and more to do with the broader market because the market does affect Tesla. I want to note something important. Right now, the market has broken below the $400 level of support, but we could actually see the market reverse tomorrow, and that's going to depend heavily on the FOMC minutes. Tomorrow, when it comes to economic data, there's not much coming out in the first couple of hours, but by 2 o'clock p.m. Eastern Time, we have the FOMC minutes. Then after that, we have some Fed speakers. If the FOMC minutes tell us that the Fed's going to be way more hawkish, and then things like that happen, the market is not going to like it. And on top of that, you have to remember we have the Fed speakers an hour before the market closes. They have a tendency of being hawkish and slowing the market down even more. But if the FOMC minutes tell us that the Fed is not going to be as hawkish, they could even be a little dovish. Like, for example, just hypothetically, that could actually help the market reverse big time. So be very careful at 2 o'clock p.m. Eastern Time. Another big thing about the FOMC minutes is they give us more detailed records about their monetary policies. And this tends to happen like a few weeks after FOMC. This time it's coming out a little bit earlier. And I do believe that this could really go either way because Jerome Powell was more or less, he wasn't necessarily like too hawkish when he was speaking. I wouldn't use the word dovish though, because he did say the Fed's going to continue to tighten. He basically used the word disinflation. The market loved it. However, looking at the current and previous inflation reports, PPI was hot, CPI was still hot, and the next report that's coming out is going to be PCE this Friday. If that's hot, it's not going to be good for the markets. So this is telling me the Fed is more likely to be more hawkish. We might see some adjustments in the FOMC minutes. Maybe they won't be as hawkish as the market is like so scared of right now. Who knows? We'll just have to wait and see. But it is possible for the market to bounce off of this. So what am I seeing in the markets? All right, time to get to the charts. Right now, SPY broke below the critical level I mentioned yesterday. That's 400. Now that we broke below it and actually closed below it, we do have some strong levels of weakness. What this tells me is the bearish momentum is still building up, and we need to get a potential bounce in order for there to be hope for the bulls. We do have a falling wedge that's forming. There is a chance we could actually break to the upside since we are oversold. RSI is currently at like 28. We could see a nice bounce tomorrow if the FOMC minutes allow it. But if they fail, then I do expect SPY and the whole market to tank even more. Let me explain this. If the market ends up tanking even after FOMC minutes, the next major support is 395, then 393, then 390 on SPY. But if the market bounces after FOMC minutes come out, we first have to break above 400. If we break that, we could slowly see this thing uptrend to about 404 to 405 or so, and the whole market could get a small rebound before anything else continues. Now, for the triple Q, similar trend. This thing broke below 294. If we break below this key support, because the first thing is we broke below our key demand zone. Now we have to watch that 290 level. That's going to be very important. And the QQQ dropped more than SPY. So we're seeing more weakness on not just the triple Q, but NASDAQ, on tech. We're seeing more weakness from that sector than the broader market. This is telling me we might get a bounce and try to retest this 298 to 300 level to try to fill the gap up here. We might see the QQQ bounce thanks to the FOMC minutes, then continue with more downside. If we fail, watch the levels I just mentioned, watch 290 very carefully, then 287. All right. The VIX has a big gap it formed. See it gapped up. We might see the VIX, in my opinion, I don't know what's going to happen exactly, but I think we might see the VIX end up coming down to fill the gap first, maybe come back down to about 20, then see a big bounce from there and continue with the uptrend. Even if it comes down a little bit, that's completely fine. But overall, the trend looks bullish on the VIX. Why? Because the market has been downtrending, and this is likely going to help implied volatility continue to increase. This could actually be used for options in a way to make even more money, but there are many strategies to play this. Just be very, very careful. I think the VIX is either going to continue pushing up, or we might come down, which I think is more likely. We come down a little bit, fill the gap, then we continue to pop to the upside, once again continuing with the downtrend for the market. AMC made a nice move today. It's up 16%. My view of AMC is this: it does have squeeze potential thanks to the high cost to borrow, but we are right now not necessarily in a full-on squeeze mode because we have a big event and AMC is pumping based off the event. We have earnings coming out, I think, within a week from now. Earnings is why it's popping. There's also the vote. So just be very careful with this. I do think it's going to continue popping, though. It looks bullish so far. Now, what else is worth noting is Microsoft. I'm seeing a small bounce as well. It could try to bounce since it is very oversold. Try to get this gap fill to maybe this 257 area, then continue downtrending. If it doesn't end up doing that, then you have to watch the major gaps down here. It could actually continue with the downside regardless. And I do think it's going to ultimately come down. It just needs a little bit more time. Apple took a bit of a hit today, did something very similar to what I mentioned in one of my earlier videos. It did end up filling the gap that's down here. Or I'm sorry, it got very close to doing so. It hasn't fully done it. It might either try to bounce first and then fill this gap, or it might come all the way down to fill the gap to the mid 140s. Either way, I do think Apple is going to head for the mid 140s very soon. The more it drops, the more likely it is for some more whales to start capitulating. That could lead this thing to coming down even harder. The dollar is basically telling us that the market has already peaked and the dollar is continuing to look strong. It's slowly getting closer to 105. That's a bearish sign for the markets. And finally, before I talk about Tesla, let's talk about the 10-year treasury yield. This thing is actually up about 3%. It actually broke above a major level of resistance around that 39 area, and now it's continuing to pop. Now, we also have this gap down here. So I'm wondering, are we going to come down to fill this gap first and then continue popping, or are we just going to keep going? It's most likely going to be one of those things. If we come down to fill this gap, this means the market could actually bounce a bit before we end up seeing a reversal and the market continues down. If the 10-year yield keeps going up, that's going to be bearish for the stock market and more downside will come immediately. So what am I seeing on Tesla? I'm going to try to make this all very simple. Now, I do apologize because I mentioned to everyone something very interesting. I mentioned to you all that we had a bearish divergence developing on Tesla, but I wasn't sure if this would end up playing out. And that's because the algos were bullish. Even on Friday, the algos kept buying and buying and buying. I wasn't sure if the algos would keep on buying again or if we would end up seeing the bearish divergence play out. So far, the bearish divergence looks like it's playing out. And this is telling us that 217 might be the peak on Tesla. This could be the peak based off this. We still need more confirmation first, but as of right now, it's suggesting that. What is the bearish divergence? Basically, look at the peaks that Tesla made, the two peaks here, you could see we had an uptrend in the share price, but we had a downtrend on the MACD, a downtrend on the RSI. This tells me that this may have been the top right here on Tesla. We could try to get a reversal. Once again, we do have investor day and things like that. It is possible, but I'm going to be very, very cautious first. Now, here's what I'm basically seeing on Tesla now. Now that we broke below 200, we are actually very close to being oversold or in oversold territory. I believe tomorrow is going to heavily depend on the FOMC minutes. If you're super bearish, make sure you watch the 193 area. Well, first there's 195 to 193, then there's 189 to 187. 187 is a very important level. If Tesla fails at 187, it's not going to be pretty. This thing could actually come down kind of fast. Now, that's the more like important support zone. If you're bullish on Tesla, make sure you watch $200 flat. If it breaks that, then we have 205, 209, followed by 215. Those are some very important levels. What do I think is going to happen to Tesla? I think starting off the day, the market is going to be trying to push up. We're going to see some bulls try to defend. It's going to be very sideways. Even if Tesla comes down just a little bit more, it's going to depend on the FOMC minutes. The FOMC minutes could cause the market to crash, or they could cause the market to rally. I don't truly know. But based off technicals, because of the fact that we do have some bullish falling wedges developing left and right, I'm seeing some signs that Tesla might try to bounce tomorrow. We might try to see this thing come above $200 maybe by the second half of the day, later on during the day. It might try to get to 205 or so, but I don't see this thing just like exploding super hard. I think it's going to try to get back to this 205 to 209 area. It's going to be a lot weaker because we are showing some signs of weakness, and it might actually fail around that area and just chop around a little bit this week before it makes a bigger move depending on the jobs data on Thursday and then PCE on Friday. And Friday is going to be a massive day. PCE inflationary data is coming out. That's the Fed's favorite piece of data. So I'm predicting that we're going to be very weak in the beginning of the day, trading kind of sideways. Then I think we might get a nice bounce by maybe I would say like 2 o'clock p.m. Eastern time. We could see a bounce depending on the FOMC minutes. I don't really know, but that's just my prediction. We might see the market bounce a bit. We might see Tesla try to get back above 200 and hopefully try to get to this 205 area. And if it ends up doing that, it might try to continue to hold for some more time before it reacts to more data later on. Right now, as I mentioned earlier in my videos, be very careful and very cautious. There is the bearish divergence that developed right here. I was mentioning this many times. I just wasn't sure how long it would take to play out. So we're still waiting for confirmation. Let's see how Tesla ends up doing. Can this thing end up reclaiming 209 and above? We'll just have to wait and see, right? It depends on data. But for now, my number one prediction, what I think is going to happen most likely is a bit of a bounce in the markets. I think Tesla's going to try to bounce too tomorrow. And then we're just going to go from there depending on more data to come out later on, right? A small bounce is what I'm seeing before the market might slow down a little bit more later on. But that's what I'm predicting. Please be ready for it. Anyways, thank you all so much for listening. I really appreciate everyone. Have an absolutely incredible rest of the day and get ready for tomorrow. Remember, the first few hours of the day don't matter as much. What matters more is what happens during the FOMC minutes. And finally, what happens later on during this week once the jobs data and PCE inflationary data come out. Thank you for listening. Have a great rest of the day. Tesla to the moon because the long-term future is still incredibly bright. And peace out.